Everybody listening, I'm sure the same, wanting to know how we unlock capital markets, not only across Europe, but here in the UK. So I'd like to explore a bit of a kind of a general view. We are looking at yet another change at number 10, the seventh Prime Minister in 10 years. It's been 10 years since Brexit. We've heard many stories over the last few years about unlocking pension capital and the Mansion House Compact and what's going to come into private markets. We've seen Labour, oddly, I think, actually invest a lot more than Rishi under the Tories was promising, which I think generally is a good thing, although you could argue where was it being invested and where is the money coming from? But again, a conversation for another time. But Neil, maybe to start with, can you give us a little kind of history lesson at the exchange and set the scene maybe from your perspective about tech and how you view the world with regards to capital markets? And then I'd like to bounce around with some questions around maybe Pisces and some of the other initiatives that you're running.
Absolutely, Dan. I'm going to quote my friend Saul Klein at Local Globe, who says that we've achieved so much in the UK, and it's in spite of all the challenges, all the roadblocks put in front of us. And I think capital markets is no different. Since I joined the stock exchange in 2020, we've had 50 plus tech IPOs. I think we would all love more, but that's happened in spite of the fact that our pension funds, our insurance funds, retail investors don't really invest in the stock market, right? So just imagine if they did. If we wind back to 1997, I think 53% of UK pensions AUM flowed into the stock market. Today is about 2.8%. Mads and I were at the UK Private Capital Summit recently chatting about this stuff. In venture, it's even more stark. I think it's about 0.8%. So it's not going to take much to create a wall of money from the UK to participate in these deals. Now, if you're a founder, you're going to get funded anyway because there's a wall of money from America looking for what they believe to be earlier, cheaper equities. So you're going to get funded, but who really misses out are UK savers in all of this. People like us with pension plans where, and unfortunately, I think a lot of it, like 70% of the US market is just tracking the S&P. So good luck if to those funds seeking alpha. But I think there's a lot of potential. Just in the last year, we've seen a lot of inquiries going to have some pretty large tech IPOs. I'm pretty sure they'll be well received. You look at how well Sage is holding up as one of our largest tech companies, £2.5 billion of revenue. It trades in line and sometimes at a premium to its closest peer in the States. So there's no reason you can't get good support here. But I would love to see, 15, 20% allocation back to the public markets. And I think this is what the Mansion House Compact try to do. It's a voluntary compact of some of the largest DC fund providers in the UK that was topped up by the Mansion House Accords, which extended the number. And then we had the pensions bill put through Parliament, which really showed intent, where government have the power to effectively mandate, should they so wish, in investment in the UK. Hopefully, you don't need to go there, but that is a really good signal. We're starting to see some capital flow, particularly in private markets, but I want to see that replicated in public markets and at scale. A £200 million British Growth Partnership is fantastic. We've seen investment in companies like Wave and Kraken. I think that fund probably needs to be about 20 billion for it to start making real impact.